Hello, welcome to another ES Futures Trading video. Today is Sunday, June 25th. It is 3:16 Eastern Time in the USA. Okay, um, what I wanted to do, I am trying uh, different things. I am moving as the market is changing as well. I'm trying new things to be a constant, to try to adapt to what the market is doing. Um, but the market has been doing these days. Now we have these time frames, right? You got the monthly here, you got the weekly and the daily time frame. I put them together here so we can see something here. All right. The monthly, the monthly time frame. This market has been trading for like 13, more than a year, a little bit more than a year in this range. Right? We have a breakout, look below and fail, and this trade, when the market looks below and fail, targets the opposite side of the range. This destination trade, the ultimate destination trade has been reached, right? No, but notice how long it takes to develop. And now we're having a breakout of this range, 13-minute range. It's a clean breakout here. The market has excess here now in the bigger time frame. Notice that, right? Notice that the market has excess here in the upper side of the current monthly bar, which is June. We have one more week of trading here. I would pay a special attention for if this monthly bar here can re-enter the range, re-enter the range. What actually do is, again, they could target the opposite side of this range, or we can have some rebalancing here above. I would pay a special attention if the market don't re-enter, does not re-enter the range, if it start building value up here. The breakout can be seen in the weekly here with some weakness in the lower side. Can you see these three matching lows here? You know, right? You can see this one, two, three lows here together. With something that looked to me at the moment, I'm talking like a couple of weeks ago, it looked like this was short coverage, right? You could place here, you can almost place trending line here. You have a trend market there in the weekly time frame. It just keeps going, right? No, can you see this? You just move the trend line. So the next thing, what's the next one? I know that I trade these kind of things, but it's remarkable how these references. I mean, if I can see this, everybody can see these things as well. But what I see is a breakout to the upside. The upper references for upside continuation are century numbers at the 44, 4500, 4600. And what's these two highs at 46 and new market high that made at the 45. And some very interesting thing happening here is the market giving us an inside bar here. Now we have 1, 2, 3, 4, 5 weeks going to the upside, back to back, right? 3 weeks going to the upside, and the last week is an inside bar. Inside bars are a form of balance. Um, the trade is the same in all time frames. Go with the breakout of the bar, go to breakout of the inside bar, preferable in the direction of the trend. The trend's to the upside. The trend's to the upside. The trend's to the upside, and this is an upside bar. But look at how close this low is. I mean, we have no excess in the upper side, no excess in the lower side. But I mean, it can go any direction. Which direction is going to go? I don't know here. Okay, nobody knows which direction is going to be. This could be some rebalancing of this, really sharp breakout here. There could be some rebalancing on inventory here. We may have some sideways trading here before the market has any kind of resolution. Or you can market just break to the down, have a breakout, can break here, all the way back to this range, right? So those are things we have to monitor. They will have to pay special attention to, right? In the weekly, if the market gets back inside this range of 43.27, which happens to be also a reference in the monthly, we are, or the market is kind of 50 points away from this low. Right? Now, the week, the daily, and you can see a gap here. This gap in the week. This is not a gap, okay? This is just a glitch in when Thinkorswim built these charts, and they just go from one contract to another, right? For us to see the continuous chart, they just overlap one contract to another. But there's no gap here. There's no gap here in the weekly. And this one is not a gap as well in the daily. Okay, remember that. This is not a gap. The market made there's something here, but you know that. We know that. But a lot of traders don't know that. They may be trying to close this gap, but when actually there's no gap there, right? Because they are used to do that. That's all what traders do is just watch. They put a chart up and draw lines. Okay, this is a higher draw line. This is a lower draw line here, but they don't put things in context. When you start putting things in context, is when you actually start to see things, what's happening in the market. And the job is not to just a second, please. Okay, where we were? Oh, this gap here. Okay, when we start putting things in context, we understand a little bit more. The market, you can see this breakout here is 43 to the 711 from the weekly and monthly. You can see it in here as well. The nuance here to me is, this look like a short covering here. This looked like a short cover, and it had upside extension here. Just trade this. It seems like it caught for me, from my point of view, it caught a lot of people short here. Trades were caught short in this market and were squeezed to the upside. We have this um, P formation here, and the contract expiring in this day here. I mean, 1, 2, 3, 4. Here up, I guess up here, all the way up to here actually, all the way up to here. The new contract, the old contract actually was over at 9:30 a.m. on this day, and it just was for me. It looked like a gigantic short squeeze here. Shorts were being squeezed, maximum pain here to the shorts, and now it's just what is happening here. It's just liquidating these longs here. Market got too long, traders get too emotional, and remember when there is short covering, okay, when there's short covering, what actually is happening is that there are traders, in this case shorts, that are getting out of the market. Right? How do they get out of the market? They buy to get out. Okay, this is no buying that is coming in to stay. This is actually traders closing position, no buyers opening new positions. Okay, that could be a possibility that I was watching here. So now, as a consequence, there's some rebalancing of inventory here. A lot of weak long-term, short-term traders are being removed here. This looks like also the market is getting too short here. This is quite, and notice how one high is just below the other one, below the other one, below the other one. I see the market as in a level, in a place, in a position where something could happen here. Okay, this is like a decision-making level here. If there is something to the downside, something serious to the downside, there could be some liquidation from this level. Okay, so far, remember, this is the volume. This is the volume. So far, there was no volume here. Right, this is the end of the month. End of the month. My bad. End of the previous contract, June contract being over. And notice the volume here, very low volume, and this week in particular is going lower. It's going lower, which is also an indication that this is liquidation rather than more, strong selling. If, in the same way how shorts were cut here, trades were cut short, now the same thing can happen to the longs. Traders get emotional. This market is going to go to 10,000 now. So let's buy. And now there could be a lot of longs here. This unusual hyperextended volume from Friday, the market was the same, had the same level pretty much throughout the day. This is I think this has a lot to do with Russell. Rebalancing of the Russell index here. That happened on Friday. So I don't consider this to be something of relevance. There was just a lot of rebalancing on the Russell index, the 2000. And going back to the daily, notice how. We have seen here this weakness here. This is the level of weakness. 4 days, 4 lows, very close to each other here, very close. Potential of firecracker effect here. Multiple lows at the same level here, and buying coming from the 50, from the 50 move, exactly from the 50 level, same level. To me, that this market is quite. It's quite questionable. I wouldn't say weak, but it's very questionable. Okay, it's super questionable what the market is doing now. There might be something out there, some kind of piece of news, some catalyst that can trigger a really steep or sharp long liquidation. When it's going to happen? It is going to happen. I don't know. But I always try to think about the possibilities, about the odds of something happening. Um, I haven't seen the bigs this low in such a in such a long time. The bigs now, look at how it went down to 13 here. This is crazy. Yeah, for the amount of risk that the market has. Huh? For the amount of risk the market is. What the heck is this? Oh, my bad. This is it. Now, if I want to look deeper here, I have a deeper look. I want to go to market profiles. Okay. I have starting to see some volume, some big volume blocks at these levels. This is, don't pay too much attention, but this is something that is happening, but it's happening to the downside. And yesterday, the curious thing for yesterday, it has left a weak high here, a weak low here. The high is very questionable, very close to yesterday's, to previous day POC. And the low as well. The low is right at the low of this distribution, which is a day that's hyper-extended to the upside as well. Very thin day, can you see this profile? Very thin. And notice how wide this profile is relative, for example, to this day, or in this case to this day, and this day as well. This is a little bit wide, but it's not as wide. But notice this one. Constantly, in this case, we saw the trap here, what happened here. In this market get too long, this liquidation, too short, and some short covering happened back to back, right? Just liquidation going from long liquidation to short covering, long liquidation, short cover. But the market has a downside trend, right? The market has make a high, which is kind of questionable. It's just one tick, very mechanical high, one tick from overnight POC. Has a super weak level here also. 4 wide, 3 wide here, mechanical sell. So if there is something that happens, remember the catalytic for a market to break, it can go in the opposite direction as well, right? Because the inventory here, who is doing the trade here are, the traders who are doing this are not particularly strong. I think they are not the strongest one in the market. Now, there could be, and we saw this, remember, this is this level that we saw in the day in the multiple time frames as a decision making level. There's still here. If this market breaks outside this inside bar to there's a breakout to the downside. It breaks here. Downside continuation, we see the 2-week range being taken out. Okay, that's the first sign, the first thing. Then the market re-enter into this range, here, okay, which targets the opposite side of the range down here. But in between, there's a lot of things here. We got this weak fields. If the market cannot take this loss, for example, there's some other thing. A lot of things have to do with what not just with what happens in the market, but with what doesn't happen. What doesn't happen sometimes is more important to what happens, or at least as much as important than what happens in the market. Because if you are expecting, for example, if you are expecting a rally, everything is aligned, right? We have a lot a lot, or we expect a break in this case, right? But there's everything that line is market gets back inside, is bought from this low here, um, or is bought from the 50 moving averages, or it's things like that, right? And the next thing to monitor for continuation is the market taking back this low, but that doesn't happen. So the message that is delivered right there, you have something there. You were expecting something, traders were expecting something, but it just don't happen, right? So there is a message that's delivered when the market do something and when the market doesn't do something. You will understand, and that can be applied to all time frames, right? To the intraday, to the daily, to the weekly, and to the monthly as well. Now, I think that's the most important thing here is this rally, this inventory being rebalanced here. All right? It is, if there is something serious to the downside, there's some liquidation here, I will expect some acceleration here, some acceleration to the downside towards this range and towards these multiple levels that signal weakness in this market. And for as a catalytics for next week, what do we have? I mean, or for events that can bring some volatility or anything like that, right? We have a couple things, right? Let's see, what do we have here? Just give me a second. What is? Okay, we have consumer confidence on Tuesday. Again, Chairman Powell speaking on Wednesday. GDP on Thursday, and PCE on Friday. Okay. Where's the beige book? There's no beige book. Nothing. I think there's nothing else. Do we have more Fed speakers? No, just Chairman Powell again speaking. And what happened on Friday? This is another thing. This is not. It's very. And what's happening in this end of the weeks are events that are very unusual. It doesn't happen. It doesn't happen. Events that doesn't happen every end of the week. We had the end of previous contract, a June contract, last Friday, or the Friday before the last one. This Friday we have the Russell rebalancing, and the Friday that is coming, what day is end of the month, right? It's end of the month. This Friday is end of the month. Weird things can happen here. What's happening here? Pay attention to this. Okay? I want to show you something. If this was a short covering here, short covering rally, there's a lot of inventory now, a lot of loans that are buying here. So remember, the new contract started to trade this day here. Okay, there's a bunch of loans now, a lot of loans here in the market. And the last thing, if you're this strategy is used so often, right? Selling naked options here. Okay, this month is going to end this Friday. There could be some, if there's going to be some in the same way how these shorts here, there is a squeeze to the upside here. The same thing can happen to the longs here. If this market breaks, there could be some acceleration to the downside. If you have if these traders have naked calls up here, because this seems so far away, now they could be underwater now. Okay, but the risk here is that the only thing, just imagine, just put yourself inside the skin, or inside the mind of how these traders think, inside the mindset of these people is the only thing that I need to do to keep my premium is, for example, in the market, if I got if I got some if I got some calls. Oh, oh, what the heck is going on here? Oh, what? Why I cannot do nothing here? Hola. If I have calls, this is strictly from the trading side of you, okay? Just to add context, okay? The only thing the market needs to do, I have 1 week, is close above here. Or I'm going to I have sold calls here, the 50 movement, maybe in this area here. The only thing I need to do is keep my naked calls, and as long as the market doesn't close, doesn't come back to these areas, I'm going to be fine. There could be nervous now, or could be some gaining, a couple hundreds. No, but when this strategy is used so often, all right. The danger that this strategy is, have here traders, right? This is easy money, right? Easy money. The only thing you have to do is sell options where the market is not going to go. I mean, wow! If there was easy money in this market, everybody will be doing lots of money in this business, and this business has a rate of success of only 3 to 5%. Only that amount of traders do have profits or are successful, and many or some considerable amount of those 3 to 5% that trades that do money in 1 year are not the same the next year. All right, you will see it. The start. You will see these things. I have been invited to. I mean, it's not. I don't to a group to join a group of trading, but I have. That would have been a good example. But I mean, it was just a lot of craziness in this group. I just leave that server. Now I shouldn't have left until I show you how there's a lot of craziness out there. Right? Everybody's looking, or a lot of people, all people is looking for some quick, making a quick buck out there, and that could be, coming back, that could be a possibility here in this market. Now, again, going back to market profiles, value keeps moving lower. The way how this is happening is something that I question. Right? This could be just rebalancing. This is a rebalancing of inventory inside the market that was going to the upside. Okay. It was the trading in this day. I got something here for you. And I'll prepare a replay here to see what happened this day. It was grueling. Right? It was grueling. I was negative. I shouldn't have traded. To begin with, I shouldn't have traded this day. Right? Notice how this inventory is super short. There was a lot of volume here this day, and the overnight just comes through this. Takes the whole range out. All of these loans are underwater. Then the nuance here is every time the market is gapping to the downside, every time the gap has been closed at the opening, on the first period, or at least on the first hour. Now it happens again on Friday. We were checking this. I guess I did a replay of this on Friday as well. Very prominent POC in the overnight absolutely completely short inventory from this day. Um, this day was a reaction. In hindsight, it's easy, right? All of this, all of this long or the short covering or call it whatever you want here came from exactly half back here. Weak trading here going to the upside and weak trading to the downside because overnight trade is not known for being the strongest one. Market re-entering its previous trading range, closing the gap. You know, the market is selling lower prices. Okay, market is selling lower prices. But what the market is doing, the market is not gaining, it's not having. If this is something serious, you will see an increase of volume here. There's no increase. The volume is decreasing here. It was decreasing here. It remains like that, like the previous day. That tells me something. If I'm going to be short, I have to be very careful in this market. And now we're getting into summer. Summer markets are here as well. Summer markets are not known for being, having a lot of volume. Summer markets have that characteristics of being thin markets. Is it going to be thin? I don't know, but that's something that usually happens. The big heads or the important the guy who makes the decision on all these hedge funds are not here, are not going to be here. And this is when short-term trading kind of like tends to dominate the market as well. And you will see a lot of short covering. I mean, trading has been conducted in that way for more than a year, right? And what do you see here? All the way up to the closing. Was market getting too short, getting too long, getting short, getting too long. Market gets back inside previous day range. All this inventory has been liquidated, but still there is significant amount of shorts, or not any kind of shorts, weak shorts. Notice. Now this is rotational market. So we're going to play this just really fast, okay? Because the risk here is traders are getting used to this now. And the market is going to the downside. There's a trend. They are selling rallies. Selling rallies here. Very painful day. Very grueling. It was hard to watch this day. Mechanical. This high is very questionable, for example. And this is full speed here. I'm playing full speed. 90 times faster. 90 times faster. If you have seen replays before, this is super slow. This is super. You can see actually volume forming here. You don't see that when I play 15 times faster. 30 times faster, and now I'm playing 90 times faster, and it's super. Look at this high here. This is not a good high. This is not a good high. This is absolutely very mechanical high here. But what happens here is a liquidation here. And the next thing that happens here is liquidation. And a rotational market here. Going to the upside ends the trend. Going to the upside ends the trend. Now let's start a new one. Did you see where it stopped? Did you see where it's stopping now? This market will stop a half back, will stop at this low. Being a day of rebalancing, of the index of relevancy of this index of the Russell index. This is, I mean, you have to be aware of those things as well. At one moment, I decided to. I got a short here. I got a short here, but I was too impatient. I guess when the market ended this trend to the upside, I went short here. But I covered when the market didn't accelerate to the downside. I noticed where this high is. And you got to be able to see where these levels are. And now, the thing here, the risk here is, when you see this kind of days, was kind of like not readable. Okay, it goes back to here, it comes back, but what these things can make is make you think, right? That the only thing that you need to do next time I got a short here. On Monday, I got a short here, but the one time frames ends, I just have to keep my short. Whatever goes to the upside is going to come back. Or if I have my long here, there's a lot of chop, it's going to come back, right? That's the risk here. Trying to find a pattern, a way to act, and just disregard the context of what is going on around, what could be going on under the surface. What I am doing here, I guess I think the market is in this decision-making level. That's my opinion, which is this area. There is nothing here. If this is something serious to the downside, we can see some acceleration to the downside here because there's nothing here. Actually, there's nothing here. The potential destination could be the low of this range here. I guess there is what is happening here is just some rebalancing of inventory, but that's what I don't write those. I don't have those thoughts or that opinion written in stone. I can change. I just try to be in sync with the market. And one thing that I do, what I am doing this, I do my homework, right? This is part of my homework. I do my homework and I try to have an opinion of the market. Why is that important? Because it actually, I find my way of trade because I start to know me and I start to having my own opinion. Which can be similar to yours or to Peter or to John. But I could have something similar. What I do is what I used to do is I used to watch Jim's analysis of the market for the next week. But I realized that I started had to be too much biased because I was following him, and instead of having my own opinion, I just started to use him, and I have a lot of biases from him. Now what I did is I started to write my ideas, what I think is happening, let's see the context, to write it down as a part of my homework. Do these videos also to have some, to put it out there. I can be wrong, I can be right. I am not, this is not my intention to say I am a perfect trader. But he's my benchmark. And what I'm going to do now, I didn't see him, right? What I usually do, I watch these episodes. He posts these episodes every weekend, and I watch these ones on Friday. Just to not to be biased, so not to get any bias from him. Anything that can influence my way of thinking. And he can have a lot of things. He can have a lot of things that I don't see. It happens the opposite way as well. right? When you start doing your own analysis, you will see things that he may have missed as well. So, uh, but this time I want to play here. This is not. This is a very short video, very concise, only I guess 30 minutes.
Correct.
Okay, let's check
Next
this
week
video together.
is potentially the most important week ahead for traders as well as investors. My reasoning is as follows. We have been in a strong trend to the upside for several months. Last week signaled potential change with an inside week to the downside. 1 week certainly doesn't change the trend. However, an inside week is a form of balance. If the market begins to trade below last week's low or coming out of balance to the downside, greatly increases the odds that a more important for traders as well as investors. Next week is potentially the most important week ahead for traders as well as investors. My reasoning is as follows. We have been in a strong trend to the upside for several months. Last week signaled potential change with an inside week to the downside. 1 week certainly doesn't change the trend. However, an inside week is a form of balance. If the market begins to trade below last week's low or coming out of balance to the downside, greatly increases the odds that a more important correction is underway. What would we be looking for? Remaining within last week's range just keeps us guessing. Reading or building higher value suggests that last week's inside week was simply inventory coming into short-term balance before the rally continues higher. Lower value supports a more lasting correction. So this basically is applicable to the guidelines we use for trading balance. Adding to the pressure for next week and the uncertainty is that Chairman Powell speaks on both Wednesday and Thursday morning. Then you've got on Friday the release of PCE, which we've heard so many times is the FOMC's favorite indicator for inflation. So the current trade location, within the recovery high would likely require serious selling to put the market lower. So we start by seeing what happens relative to the inside week, and we don't get the final major number until Friday with PCE. Thank you.
Okay, you know, uh, something that uh, something that you can get from his update is, what I was saying, that this is a kind of like a decision making level, right? We could have some serious selling here that can happen if this is not just loan liquidation. Or it can be, since this is a form of balance, it can be some rebalancing of inventory here and this before the market can keep going to the upside. What's going to happen? Nobody knows that. What I missed is he talked about Chairman Powell speaking, on Wednesday and Thursday as well. I don't have him scheduled for Thursday, and I don't have him. I just have him for I don't have him Wednesday. Let me check the order. Wednesday, Thursday. Oh yeah, and that's why. And I notice. Look at this. This is the order. calendar. Here it is. Wednesday, Fed chair power speech 9:30, and what the heck? 2:30 again? I know maybe this is overseas. I don't know. Maybe it's in Europe. No, but I didn't have this one on my economic calendar on calendar day. This is in trading economics. I missed that. You know? And that's why it's important. I mean, it's quite relevant or quite important to have some kind of like a benchmark or somebody who knows what he's doing, right? At the PCE, this is going to be a really good number. The trend, the monthly trend to the upside, 1, 2, 3, 4 months to the upside, breakout range, really clear breakout, nice clear breakout, upside monitor for upside continuation, right? And the same, notice this. This is something that I hope you have noticed, right? The way how he talks, right? If you see the intraday, what happens intraday, how do you approach a market in the intraday session? It's the same way how you approach a market in the daily time frame, the weekly time frame, and the monthly time frame. What is the doom of many traders is, that they don't look at that. They just get lost in. They just get lost in this, in the 5 minutes chart. You don't know. You have no idea what the market is doing. You see market going higher, lower, higher, lower. It goes from a balance here, balance, short covering here, for example, right? This is small. This is it jumps right away in the 5 minutes chart. Boom, there's short cover here. If you have short covering, this weakens the market actually, but it still keeps going to the upside. But I don't trade the 5 minutes, right? But you just look at these and you miss the bigger picture, what is going on around, right? And that is what and then as I say, I have a server here that I guess this lady owns that server. What it is? This lady here owns the server, and this is just craziness. It's a lot of craziness in there. Traders just get lost, it's like if you are driving, when you drive, you want to be aware of your surroundings. You see who is in front of you, you see who is beside you, you know who is behind you, you're trying to see the conditions on the road, what kind of weather you have, what kind of traffic you have. There's a lot of things that are going on in the market. All of them going on at the same time. And when we look so close, would be the equivalent of driving, but just looking over the hood. I just look to the hood, over the hood. Bad things can happen when you do that. All right, this is my that would be it for today. For this update and replay. I will be back tomorrow at 8:50 with the pre-market and do some live stream before the market opens. All right. Okay, guys. I hope this helps. I wish you a good end of the week, or whatever is left of it. Great trading week. Bye bye.